Let's get some more on those strong gains on Friday night, what it means for us. Chris Weston, IG Chief Market Strategist, joins us from Melbourne. Chris, great to see you there. Yeah, all the talk on Friday from the ECB, we had PBOC actions as well. Fed's Rosengren saying the Fed won't rule out more QE if the US economy weakens. All added up to quite a recovery on markets at the close.
Absolutely. The question everyone's asking now, Bridie, is whether or not we can believe in this rally, whether or not this has got further upside, whether or not the market has pushed central bankers into believing that rates can stay lower for longer, and this idea that perhaps we can get tightening in 2015 is perhaps a bit of a fallacy in the short term. We have seen some comments over the weekend, specifically from Mr. Holden, who's the chief economist at the Bank of England, who also made Friday's comments on Friday as well. But his comments on Sunday are saying that I think perhaps the markets have overreacted to some of the weaker data of late. Now, he did say on Friday as well that perhaps a rise in the UK funds rate, or should we say the cash rate, by mid-year is probably not a bad bet. And you can add that to the comments that we heard from the ECB, who talked that we're going to start seeing covered bond purchases this week, something that Mr. Weidmann within the Bundesbank is opposed to because of the burden that's going to put on the taxpayer. Of course, then you've seen what we've seen in China over the weekend, or at least reports that we're going to see the standing lending facility being used. They're going to probably inject about $32 billion worth of liquidity into a number of the top-tier banks and the regional banks as well, something that they did on the September the 16th. So again, liquidity measures there. The idea that perhaps they're not going to raise rates so soon in the UK. You can add the comments that we saw from John Williams and the Fed president last week with Mr. Bullard, saying that they have the premise there to extend quantitative easing, or QE3 there. And again, you've just got this situation where markets are a lot more calm. We saw a 10% pullback in our market, a 10% pullback in the S&P to a degree, and people are now saying, that's probably the level that we need to get in. The question now is, can we extend this week? And earnings so far in the US will be very much in focus, and they've come off very, very positively, as we always see.
Just on what it means for us at the Open, we should expect a nice rally, shouldn't we?
Absolutely, yeah. No, it's going to be a good day, well, at least on the Open. Friday was quite a hard one because we did see people looking to fade the session, but that's only to be expected, I suppose, as we get into the afternoon. We saw some decent gains all from the lows on Wednesday and Thursday, and certainly the volumes would suggest that a lot of the buying had already been done. But yeah, we've got an Open at 53.25. The question is then, can we break through this 53.32 level, which is the 38% retracement level of the recent 9.8% sell-off that we saw? So we want to see a break above that level if the bulls can really sort of catapult this market higher. And the big buying that we've been seeing over, or certainly last week, was centred in the materials space. That sector was up 2.3%. Healthcare was also very strong, and obviously healthcare very much in focus today with Medibank Private going there. But yeah, I mean, materials not the greatest lead today. If you look at BHP's ADR, it suggested the stock will open 1%. Iron ore's up a touch, copper's up about 1% from Friday's close, so that's good. Then I think if you look in energy, Brent and WTI prices are actually effectively a touch lower from where we closed on Friday, so not a great lead for the energy space, but it looks like we're going to get broad-based gains here today.
Just, I guess, on that, overarching question, as you said, where to from here? Did you get the view, though, that, this idea that in the market there's some large hedge funds had to change some positioning in various assets because they were caught short with the fall in crude oil prices, that had a lot to play with, particularly Wednesday's moves on the market, and that perhaps that signals maybe, that the volatility from here on in has calmed a little?
Well, as I say, the VIX was down 12.7% on Friday, and it certainly looks like a few people had taken some. It's closed off a few put options that they'd used to hedge their portfolios. But that was the talk. On Thursday, we did hear a number of different market rumours about some hedge funds getting in difficulty. I mean, certainly over the weekend we've heard that there was a commodities-based firm looking to reallocate some market positioning that they had. I think on Thursday we heard a slightly different rumour that someone had gone into a position. With beginning of October, a big hedge fund had gone in with a 75% allocation towards equities and 25% towards bonds, and therefore they had to revise that. And certainly the price action would suggest that was the case. So yeah, I mean, unless we actually get the actual specifications coming through that that's actually happened. I think you've got to look at price action and the 10-year. I mean, especially the 10-year US Treasury. I mean, we saw a major capitulation on Wednesday. We saw a bit of follow-through selling on Thursday and Friday as well. So the 10-year was up 4 basis points there. So huge volatility. It would be thematic that we are starting to see reallocations from different funds. And I think you've got to also add in the fact that we saw massive business from the high-frequency trading community as well, which would have exasperated some of those moves as well.
Just on to what we're watching out for this week, what host of China data out, that's going to be very important. For us too, of course, key will be inflation as well. What are the key releases going to be for you?
Yeah, look, that inflation number is going to be interesting, especially on the currency side of things, where we're looking to try and fade things like the Aussie yen and Aussie dollar, I think, will probably consolidate this week. But the trim mean number is expected to drop 20 basis points to 2.7%. So that's largely in the price now. I think if we get anything, a really big miss, somewhere below 2.5%, then the Aussie dollar should see some fairly aggressive downside coming through. The China data is going to be interesting. If you look at the industrial production numbers, that's expected to rebound about 60 basis points this month. So that's going to be very, very interesting indeed, especially when you're looking at the actual growth number at 7.2%, which is the consensus in the market there. There are investment banks, economists there looking for a 6 handle on this economic data this week in China. So that would have major psychological ramifications, I think, especially at this time where part of the reason why we're starting to see equity markets come under pressure is this global growth or disinflationary side of things as well. I think in Europe that's going to be very interesting because we get the asset quality review coming through back end of the week. We know that 130 banks have been stress tested. Usually the stress tests are a little bit lackluster in itself, but we know there's been big implications around that because a lot of banks have had to sell non-core assets. That's created European inflows as they look to repatriate some of that money back to try to address their balance sheet. So what happens after the asset quality review will be very interesting indeed, in the sense that we could see euro coming under renewed pressure there. We also get, as Benoit Cor pointed out on Friday, we do get the start of the covered bond purchase programme, so that could support equity prices and risk assets as well. So I think Europe's going to be right at the centre of this again, and US CPI I think will be closely followed as well, with core and non-core inflation expected to drop very modestly there.
Lots on. Chris, as always, thank you so much for that.
Thanks, buddy.
Chris Weston there.